Hello and welcome to this session on IFRS 16 compliance with the Crowe Leased Asset Calculator. My name is Brian Markgraf and I'm a consultant and lease accounting subject matter expert. Let's get started. From example 14a from the illustrative guidance, a variable lease payment dependent on an index. The lessee enters into a 10-year lease of a property with annual lease payments of 50,000 currency units, payable at the beginning of each year. The contract specified that the lease payments will increase every 2 years on the basis of the increase in the Consumer Price Index, or CPI, for the preceding 24 months. The CPI at the commencement date is 125. There are no initial direct costs, and the incremental borrowing rate is 5%. From this, we can generate our payment schedule, lease liability amortization schedule, and asset depreciation schedule. We see that our present value of future minimum lease payments is $405,391, which is also the beginning balance for our lease liability amortization schedule, and also our beginning balance for our asset depreciation schedule. Continuing with the example, at the beginning of the third year of the lease, the CPI is 135. The payment for the third year, adjusted for that CPI, is 54,000 currency units, which is 50,000 currency units, times the new CPI of 135, divided by 125, which is the old CPI. Because there is a change in the future value of the lease payments resulting from a change in the CPI used to determine those payments, the lessee remeasures the lease liability to reflect the revised lease payments, which are 8 annual payments of 54,000 currency units. From this, a new payment schedule, liability amortization schedule, and asset depreciation schedule can be generated for 8 periods of 54,000 currency units, with a present value of future minimum lease payments of $366,464, which is the beginning balance of our liability amortization schedule. And we see that the beginning value of our asset depreciation schedule is $351,458, and so we can see how we came to that number. And to remind you of the values before the lease adjustment, the ending balance after the second year of our liability amortization schedule, the carrying value of our liability is $339,319, and the carrying value of our asset, of our right-of-use asset, is $324,313. So this is how we came to the adjustment. So the new present value of the future minimum lease payments, which are the 8 payments of 54,000 currency units, is $366,464. We subtract out the prior lease liability, the prior carrying value of the lease liability before the modification of $339,319, giving us a total increase to the lease liability of $27,145. And then we see our right-of-use asset, the carrying value of our right-of-use asset before the modification is $324,313. We add the increase to our lease liability of $27,145, and we get our adjusted right-of-use asset balance of $351,458, which we can see is the beginning value of our asset depreciation schedule. Now we can head into the Crowe Leased Asset Calculator to see how our application effectively and accurately accounts for lease adjustments in accordance with the IFRS 16 standards. So currently we are in our instance of Microsoft Dynamics 365, and first we'll need to set up our index rate types. So if we go to Setup, Index Rate Type, we can click on New and add our new interest rate. Some interest rates, we already have CPI in there, but we can add interest rates, LIBOR, anything that a lease contract can be tied to. So since we already have CPI, I can add CPI 2 as an example. The name, Consumer Price Index. And then to actually add the rates, we can click Index Rate and New. And so we will begin this lease on 1/1/2016. So at 1/1/2016, the index rate was 125. And then the guidance says that 2 years later, on 1/1/2018, the index rate jumps to 135. Okay. And once everything looks okay, we can click on Save. And now we can enter our lease details. We can go to Lease Summary, and the lease summary shows a list of your entire lease portfolio, including important information such as the lease ID, lease description, the lease group, and the country or region. To add a lease is as simple as clicking on New. And here a wizard pops up that you can enter in all of your lease information. So for the lease description, we can call it IFRS 16, example 14A. Lease classification, it's IFRS 16. The fair value of the asset doesn't matter in this situation. However, for ASC 842 leases, the fair value does play a role in determining the lease classification. There's no implicit rate stated in the example, so we will instead use the incremental borrowing rate of 5%. It is compounded annually, and the payments are made annually. There are 10 payments. And so for the lease term, we will put 10 years. And the asset useful life, it's not stated in the example, so we can also put 10. There's no transfer of ownership. It's not a unique asset. And for the lease group, we can say that it's a building. Since the guidance states that the payments are due at the beginning of each period, that would be an annuity due lease. The other option is an ordinary annuity, and that's when payments are due at the end of the period. Currency we can keep as USD, and vendor account we can pick a vendor account from our dropdown, which is populated from the AP module in Dynamics. The guidance states that there's no initial direct costs, lease incentive, prepayments, or dismantling costs, and we can go ahead with our commencement date of 1/1/2016. Next, we can head to our index rate tab, and we can see in the index rate are the index rates that we have created in the index rate type setup, and we can pick our CPI2. The months between revaluation tell the system how many months between the index revaluations, and in our case, the guidance states 2 years, so we will put 24 months. The index rate is automatically populated based on the values in our index rate type setup form. However, we can override this, but in our case, 125 is what we had entered before for 1/1/2016, so we will keep that. Next, we have the option to either manually revalue the lease or have the system revalue. In our case, we want to show how the system automatically can account for index rate fluctuations, so we'll keep this to no. Next, allow decreases. This gives the user the ability to choose if the system will only allow increases or allow decreases or allow both. So we'll keep that to no because the guidance states that the lease payments only change when there's an increase in the CPI. Next, there's a % limit on the rate increase. If some contracts state that the payments can't increase above 10%, this is where you would put that in as a whole number. And next, the index change to apply. This tells the system how much of that change in the CPI will apply to the payments. We also have an index rate clause that gives the user a little more information about the index rate and where you can actually put in the clause from the contract stating the details about the index rate. So for our case, we can leave that blank, and we can head down to our payment schedule lines. We can click on Add, and the start date is 1/1/2016, and since it's a 10-year lease, it will end 12/31/2025. And the payments amount, 50,000 currency units. And we can see the index rate column automatically populates with the index rate from the index rate tab. So when everything looks okay, we can go and click Create Lease. And we have one more chance to take a look at the information, make sure everything's okay. And we can click Function, Create Schedule. And we see a notification saying that our payment schedule has been created for that lease. To view that payment schedule, we can click View, Payment Schedule. And we see our payment schedule for the 10 years with a payment of 50,000 currency units due at the beginning of each year, and our total present value of future minimum lease payments as 405,391, which matches the guidance. When that looks okay, we can click Confirm Schedule. And we see our notification stating that our asset depreciation schedule and amortization schedule have been created against this lease. So we can check those out. We can go to View, Liability Amortization Schedule. And as we see, the beginning balance of $405,391 is being amortized over the 10 years. And next we can go into our asset depreciation schedule. And we again see that our beginning right of use asset balance is $405,391 being straight line depreciated for 10 years. Once those schedules look okay, we can click Function, Initial Recognition, and we see an info log saying that our journal has been created. So we have just created our initial recognition journal entry. We can go to our journals, General Journals, and we can see here our initial recognition journal entry has been created. And when everything looks okay, we can go ahead and click Post. So now our right of use asset and initial liability are on our books. So we can click out. And the guidance states that after 2 years, the index rate increases. So to simulate the 2 years, we will create and post all of the journal entries that take place during those 2 years, including the payments, the asset depreciation, and the interest accrual. So to do that, we can go back to Common and Lease Journal Batch. And here we can select a schedule, a date range, and the option to post or not, which is very easy when you are posting journal entries for a large number of leases. So we'll start with our payment schedule, and from 1/1/2016, 2 years to 12/31/2017, we can summarize and post, and choose our lease from the drop-down, and click OK. And we see a notification saying that the journal has been posted, and we can do the same for the other 2 schedules. Our liability amortization schedule to accrue the interest. We can summarize and post, and choose our lease from the drop-down, and click OK. So all 24 of those entries to accrue for interest have been created and posted very easily. And we see the info log saying that it's posted, and we can again do the same for the asset depreciation. We can click OK. Great. The operation has been completed and the journals have been posted. So now we can head back into that lease, see the posted journals, see the transactions tables, and then run the lease revaluation process. So heading back into the lease summary, we can click on our lease, click Journals, click General Journals, which will show us our interest accrual and the asset depreciation. So we see our interest expense journal entry, as well as our depreciation expense journal entry. So you can close out of that and head to Journals, Invoice Journals, and see the 2 payments of 50,000 currency units, which has been summarized to $100,000, have been posted. So we can now see our carrying value of our right of use asset and initial lease liability. So by going to Liability Transactions, we are able to see the lease liability balance. This is after the 2 years, and that is the 339,318 number. And next, going to our asset transactions, we can see that we have our initial recognition less the right of use asset depreciation expense, which gives us a total right of use asset carrying balance of $324,312, $313 for rounding. So now when everything looks good, we can head back to periodic index rate revaluation and run the index revaluation. We see here that we have our index rate revaluation form, which shows the different processes that have been run for the index rate, and it shows a summary of how many leases were adjusted, the liability adjustment balance, and the variable payments that have been adjusted. For IFRS leases, there are no variable payment adjustments, That occurs when an index rate is revalued under the ASC 842 standards. And we will also post another video to explain how the Crowe Leased Asset Calculator can account for ASC 842 index rate revaluations. So to start the revaluation, we can click Index Revaluation, Lease Index Revaluation, and we can filter for our lease, or we can run for the entire portfolio. For our case, we can click Filter, click Add, and then filter for our lease. There's many different options to filter by. So if you want to filter by a lease group, by the expiration date, the system gives you the ability to set any criteria, run the index rate revaluation on batch, so you can set it up to run every month by group or any other criteria. And by doing that, you would just go to the run in background. But for our case today, we will not. We can click OK. And we have a revaluation, or a preview, excuse me. We see the preview, we see how much our asset will be adjusted by, how much our lease liability will be adjusted by, the lease ID. And as you see, the asset and liability both will be adjusted by $27,145, which, going back to our PowerPoint, is the same number as the guidance gives. So when everything looks okay to post, we can click OK. And we see in our info log that our operation has been completed and the number of vouchers posted to the journal is 1. So to see the updated lease and to see the adjustment entry that has been posted, we can go back to our lease summary, choose our lease, go to Journals, General Journals, and we see our right of use asset has been debited by $27,145, and our operating lease liability has been credited or increased by $27,145. And we can go into our lease details and see the newly adjusted lease. We see our lease term is now 8, which takes into account for the passage of 2 years. We can go down to our payment schedule lines and see that a new payment schedule line has been created with the payment amount of $54,000 with the index rate of 135, and it even tells us it was created by the index revaluation, which gives the user visibility into why there has been a payment escalation. So next we can view our new payment schedule and amortization schedule. So we can head into View Payment Schedule, and we see that starting on 1/1/2018, we now have payments due every month, or the beginning of every year, of 54,000 currency units, with the present value correctly populated at 366,464. Next, we can head into our liability amortization schedule. And we see that the beginning balance is 366,464 being amortized over the remaining 8 years of the lease. Next, we can head into our asset depreciation schedule and see our updated right of use asset balance is being depreciated straight line for the remaining 8 years. To see our current carrying values, we can go back into our transactions tables and see our lease liability transactions. We see a lease adjustment increase of the $27,145, again giving the user visibility into the modifications and adjustments made by the lease. And we see that the current carrying value of our lease liability is $366,464. And then again, heading into our asset transactions table, we see our lease adjustment increase of $27,145, giving us a total carrying value of $351,458. We hope that you've enjoyed our demonstration of the Crowe Leased Asset Calculator. Please reach out for any questions. Thank you.